utter collapse in new home prices. We have to talk about a scary quote about the Chicago commercial real estate market that I fear is true for lots of big markets. And I will get you up to date on the Las Vegas event, the boot camp, and what we discussed yesterday with the buy box class. Let's get into it, folks. Let's start with new home sales. We will go there first. I want to warn you, you are going to get a lot of crash bros and doomers saying something that is factually correct, but is meant to scare you. So let's talk about it right now. Let's get it out of the way. New home prices are collapsing, crashing, dropping 8.7%. Now, of course, hopefully you know by now, I say this in tongue-in-cheek because while it is factually correct that new home prices are down 8.7%, there is a story behind the drop. If you will look at the housing being sold today versus the housing being sold a year ago, guess what you would find? Yes, folks, home builders are building and selling smaller homes. And guess what, folks? Smaller homes are cheaper than McMansions. So here is the deal. Home builders at the end of last year rotated out of their specs and started building smaller homes. So new home prices compared today versus a year ago are down 8.7%. That is factually correct, but it means nothing. They are still wildly profitable. And here are the transactions. Remember, existing home sales down 2.2%, going to be under 4 million next month and probably the month after. More on that in a minute. New home sales last month were down 2.8% as a reminder. Estimates for this month were up 0.9%. And as I shared for you the last week, I expected it to be a blowout number. I was thinking like 2 or 2.5%, a significant beat, but it came in even above my expectations. It came in at a positive 4.4%. Folks, mortgage rates are freaking 7.5%. You are really doing yourself a disservice if you are not going and at least talking to a new home builder. And more on that in a minute, because I think there is something going on right now structurally in the housing market that hasn't happened since 2005. There's something happening in the housing market today that hasn't happened since 2005. More on that in a minute. So again, expect the crash bros and the doomers to tell you that new home prices are crashing 8.7%. Why do they do that? Because they want your clicks. They want you to live in a doom loop. They want you sitting on the couch doing nothing, paying them a penny a video. I want you to understand what's going on and take action for yourself. Go ahead and learn your market, learn your buy box, all of that great stuff. Let's talk about a quote that I actually shared on Twitter yesterday. It came out of The Real Deal. It's somebody I follow on Instagram. Let me read this to you. Let it sit in. And then we could talk about just how bad this is going to be. So this again was from The Real Deal. It's somebody I follow on Instagram. This was about Chicago commercial real estate. Here we go. Every single building in the entire city is worth less than its debt, with maybe 10 exceptions. That's not good. This is the capital stack. This is what I have been warning about for quite a while. There is a fundamental, the commercial real estate, I don't know how to say it. The commercial real estate repeated the stupid and idiotic behavior of residential real estate in 2006. All these people came in and chased easy money and financial engineering and yada, yada, yada. They borrowed millions of dollars from people that they don't really know, and now it is all gone. Again, this was about Chicago commercial real estate. I believe it unfortunately has to do with a lot of commercial real estate. Every single building in the entire city is worth less than the debt, with the exception of 10 buildings. That has got to hit you at your core, because that just tells you how bad this problem is going to be. Retailers. Well, we've been getting some retailer earnings, and frankly, generally speaking, they are not good. We got something from Macy's, Dick's Sporting Goods, Foot Locker, Peloton, all missing, all slashing guidance. The consumer seems to be tapping out. Net, this is, I don't know how else to tell you, this is probably good news for the Fed. The Fed was worried about a reacceleration in goods inflation, right? Remember, we have goods, we have shelter, and we have wages. The Fed was probably worried about a reacceleration of goods inflation, and with the retailers' disappointment, with deflation in China, all of these things, that seems to be put on the back burner. These numbers coming out this week, in my opinion, my wild ass guess, means the Fed will pause in September. The numbers are not looking good. And you add on top of that all the bank downgrades from S&P and Fitch, and there's more coming. Don't get it twisted. There are more bank downgrades coming. It is the delay, the feedback loop from rising interest rates is showing up right now. It has started, and it'll build. It's going to build going forward. So we need to pay attention to that. So I think it was about 6 weeks ago, I brought you a statistic that blew my mind. It was basically 88% of the debt that you and I hold are fixed with roughly 12% variable. This is why the Fed raising rates doesn't have the dramatic impact that some people think it would have. It's like, hey, go ahead and raise your rates. Doesn't change my mortgage. Go ahead, raise the rates. Doesn't change mine. Here is something that the crash bros, doomers, and negative headliners don't understand. It is something called the effective interest rate. What is an effective interest rate? You basically take all the mortgages, residential, all the residential mortgages in total. You get all of their interest rates, you divide by the number of mortgages, and that is your effective interest rate. Do you know? You know what? Let's get some audience participation. I'm feeling kind of, I don't know, fun this morning. Take a wild guess. Go ahead, leave it in the comments below. Take a wild guess what you think the effective interest rate today is on all mortgages. All of them. All residential mortgages. I'll give you a couple of seconds to do that. Here is the answer. The effective mortgage rate on all current mortgages is 3.6%. There is no stress in the mortgage market. When the blended interest rate is 3.6% of all mortgages, and don't forget, like 40% of housing doesn't have debt. So an effective interest rate is just the housing with debt. There's a whole bunch of houses with no debt. So again, an effective interest rate at 3.6%, that is fixed, not variable, means the people that are in housing today that took action and bought the last couple of years or refied in the last couple of years, they are sitting pretty. Their mortgage payment is less than rent in most cases. They are not going anywhere. They will default on credit cards. They will default on cars before they default on housing. There's no distressed inventory or very little distressed inventory coming. The effective interest rate is just too low. Now, in fairness, we are currently sitting at 7.5. As more mortgages get originated, it will pull up the 3.6%. But here's the deal. Mortgage demand is at a 28-year low. We just got the numbers this morning from Mortgage Business Daily, I believe. Mortgage demand to purchase is at a 28-year low, and it should be. It should be at a 28-year low. That's what 7.5% mortgage rates do. They crush transactions, not price. We've been talking about that for quite a while. So, effective interest rate. tell that to the doomers and crash bros. Maybe they can go learn something. New home prices. So we've already talked about new home prices dropping 8.7% and why that happened. Here is something that hasn't happened since 2005. This is rare. New home price, average, median, is falling below existing home sales. Median. Think about that. A new home's median price is falling below the existing home. So new costs less than used. New costs less than used. Now, of course, if you watch this channel, you know the devil's in the details. The new homes on average are smaller than the ones, than existing homes. But it is very interesting. Usually, if you go back and look at the charts, new has a, I don't know, like a 5 to 7% premium. It's new, right? Nobody lived there before. But just like Olivia and my experience in Las Vegas, we shopped existing. We wrote offers on existing, and we got a new home for less than the cost of all of our existing offers, significantly less. And the house is beautiful. So what we're seeing today is new home builders are using their strength to take market share. New home sales historically have been 11% of total transactions. They are over 20% right now and heading higher. They're doing that because they're feeding the market. They're building smaller. They're lowering price points. They're buying down rates. They're giving seller credits. They're doing what they should do. And they have fat margins. August and September. So you have already heard me say, I think it was on August 2nd, it might have been August 3rd, that existing home sales that will be reported on September 21st will be under 4 million. We will have a cycle low. I am here to tell you that it is my wild guess that September will be worse than August. Think about that. If August comes in at, I don't know, 3.85, September will be worse. September will be worse. The mortgage rate is staying high. We're seeing purchase demand. And of course, if you go into escrow now, you are not guaranteed to even close in September. So August will break the trend. We will go below 4. In September, I believe, will be worse than August. Transactions, not price. So let's talk about the boot camp. I launched the boot camp, one time only, 50 people. I want to let you know, if you are interested in this, it is time to sign up. We already have 11 or 12 people signed up in 24 hours. I have a list of 35 people that are interested. I've already sent a note to all of you. If I missed you, I apologize. Again, we will go to 50 people. If you don't have my course, How to Get Started One Rental at a Time, it is $997. If you are already a course member, it's only $500. We'll work out the difference. This is what happens when you buy the 10-week. 1, I will activate all of your free bonus material. I will do this manually. It will show up in your Teachable account, and I will send you an email when that is done. 2, I will send you an email asking you 5 questions about yourself and your situation. I am taking this very seriously. I want to know who's coming, what do you want, and where are you at in your journey? Because I want to make sure that my one time doing this exceeds all expectations. And then 3, we will be hosting a day 0 event, so it's not part of the 10 days, the first full week of September. It probably will be Thursday or Friday in the evening. I just want you to know what is coming. Okay? So again, if you're ready to rock and roll, you sent me a note, I've reached out to you. Register, we're already at 11, it might be 12 this morning. We're going to go to 50 and then we're done. So I don't know what to tell you. Register. Next, buy box. I want to thank everyone who watched yesterday's video at the end, and I made a gesture. I basically said, hey, if you're in a bad spot, you don't have $50, but you want to get moving and you're willing to do the work, then I wanted to give away the buy box course to you. I had several people tell me and write me up nice notes explaining, and I went ahead and gave it away. What I really enjoyed is actually a few more people bought the course. I'm sure you bought the course because you're like, hey, I can afford the 50 bucks. I want to help Michael. I want to get started. The buy box course at $47, it's 2 hours, 2.5 hours, telling you what's going on, gets you started, gets you focused. So I want to thank you. You could have made up stories, lied, whatever, tested me. And if you sent me a note telling me your story, I gave it to you. I didn't ask questions. I didn't verify anything. So I just want to thank all the great people that watch this. They're like, no, Michael, I can pay for it. I'm going to buy it. It actually put a smile on my face to both help people who need it and also to see the people out there that are like, no, I got it. I'll take you up on that. So that was a pretty good feeling. And then I just want to catch you up on the Vegas event. Again, step one for me is finding you and I a location and a date. I've already reached out to several off-strip casinos and resorts. Let me just tell you, a lot of the quotes that I've gotten are $10,000 for the space. There's one quote that says $20,000 for food. That's before we get recording and all these other things. So this is going to be expensive, but I did find a little spot, thanks to Sean Cannell from Think Media, off the strip that might work out. That'll be less money. I'm actually going to go see it on Friday, September 8th, I believe, and see if it works for us. The reason this is important to me is, again, I'm willing to lose some money, but not a lot of money. So we're going to find something that hopefully works for all of us. So again, folks, the daily financial news, new home prices crash, but there's a great reason why they're building and selling smaller homes. All right, folks, that's what I got for you. Like, subscribe, comment. Don't forget to check out my new channel, The Daily Financial News. My team is putting out this video later today with edits and videos and B-roll. Pretty cool stuff. Thank you, everybody. Take care. Bye.